Colleagues, good afternoon. I'm happy to see you. We are beginning the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And to begin with, we'll hear the statement by following the Board of Directors meeting. Good afternoon. Today we have made the decision to cut the key rate to 20% per annum. The high key rate has led to a substantial deceleration in inflation. Price growth is still largely uneven across groups of goods and services, but now we're more confident that disinflationary processes have become sustainable. The dynamics of inflation and economic activity give us the sufficient ground to cut the key rate down. However, we are going to maintain tight monetary conditions for a long time. This is necessary for a sustained return of inflation to the target. I would now dwell on the reasons behind our today's decision. Firstly, inflation continues to slow down. In March, the current price growth rate was 7% in annualized terms, and in April, it decreased to about 6%. The main contributor has been the high key rate. Nevertheless, its impact is still uneven across different segments. Tight monetary policy has had the strongest effect on the group of non-food goods, where price growth rates are rather low overall. We can clearly see that the key rate has been transmitting itself to this segment through the interest rate and the exchange rate channels. High interest rates have become one of the major drivers of the ruble strengthening. Coupled with a cool down in demand, this has additionally affected price dynamics in the non-food group. As a result, many goods in the segment of household appliances and electronics like smartphones, TV sets, and vacuum cleaners have shown little change in prices or have even fallen in prices over the past year. Current growth rates of food prices have declined overall, albeit less notably than those of non-food prices. The dynamics of food prices were also diverse. Thus, prices for certain products such as milk and eggs have stopped to go up or even started dropping following their spikes over the previous periods. Prices for greenhouse vegetables are declining abnormally fast for this season. Contrastingly, price pressures in the group of meat products have been intensifying. Growth rates of prices for services remain high as demand in this sector is affected by the dynamics of households' incomes more than by lending dynamics. Given persistent income growth, the demand for services is increasing faster than that for goods. Inflation expectations are still high. Nevertheless, businesses' price expectations have been lowering sustainably since the beginning of the year, so in general we can state that a downward trend here has formed. As for households' inflation expectations, there is no consistent direction here. They are fluctuating in the range of 13 to 14%. People usually form their expectations based on the prices they see every day. Now, elevated price growth rates are typical of basic food items, transport, and personal services, which hampers the decrease in households' estimates of future inflation. Elevated inflation expectations are a key factor requiring us to be cautious in taking decisions. Secondly, the economy. Domestic demand, albeit still high, is nevertheless shifting to more moderate growth rates. High-frequency data for April and May indicate that the rise in household consumption and investment activity continued to decelerate smoothly. According to our monitoring of businesses, demand will be expanding more slowly overall than last year. That said, economic activity, like inflation, is characterized by high heterogeneity. The structural transformation of the Russian economy inevitably leads to a situation where demand will be rising at elevated rates in some sectors while falling in others, especially after overheating in some segments like in construction. As for the labor market, there are now more signs of an easing. According to our surveys, the percentage of companies experiencing labor shortages has been declining. The number of vacancies and wage offers in the most overheated segments, such as IT, has been trending downwards. In addition, the number of industrial enterprises reporting to be fully staffed has gone up as well as that of enterprises that have reduced the number of work shifts. What is important to us is whether these cases will influence overall labour market tightness and the dynamics of the wage-to-productivity ratio. Thirdly, monetary conditions remain tight. Yield curves in the government bond market and the money market have shifted downwards since our meeting in April. Overall interest rates on loans and deposits have edged down since the previous meeting. The spreads between loan rates and the key rate have narrowed, although they are still elevated due to banks taking a more conservative approach to risk assessment. Nominal rates have been declining, but real interest rates should be taken into account as well. Considering the inflation slowdown and some decrease in inflation expectations, real interest rates are still high, while monetary conditions remain tight overall. Today's key rate cut, taking into account the inflation deceleration, does not imply a significant easing of monetary conditions in real terms. In this environment, credit activity remains modest. The cool-down has been mostly observed in the segment of unsecured consumer lending, while mortgage lending saw a slight increase. I would like to note that activity in the housing sector should not be assessed solely based on mortgage lending. We see that the percentage of homes bought by people using their own funds has been growing, and sales in square meters were relatively stable over the past 10 months. As for corporate lending, it expanded slightly over the previous 2 months. However, considering very modest growth rates of the portfolio in early 2025, total lending to the economy is still closer to the lower bound of our forecast. The saving ratio remains high. Money supply is also moderate and is changing in line with our forecast. As regards external conditions, the foreign trade surplus edged down in March-April due to falling prices for core Russian exports, that is crude oil, certain metals and coal. Import dynamics are still moderate, which is mostly the result of our tight monetary policy. Tight monetary conditions have also resulted in sustainably high demand for ruble assets. The difference between interest rates in rubles and other currencies is now at its all-time high. This means that it is more profitable for both companies and households to make savings in rubles than accumulate assets and savings in foreign currency. Coupled with the fiscal rule, this ensures a stable balance between demand and supply in the domestic foreign currency market, even despite declining oil prices. Now I would like to speak about risks to our baseline scenario. Some pro-inflationary risks have decreased since our previous meeting. For example, the risk of the Russian economy deviating upwards from a balanced growth path for a longer period. Nevertheless, pro-inflationary risks still prevail. First of all, we are concerned about the persistence of high inflation expectations among households despite disinflation and a stronger ruble. Moreover, risks associated with the labour market are rather pronounced. The situation here may remain tense for a long period, hindering the return of inflation to the target. Finally, there are risks related to the dynamics of global prices for Russian exports. Disinflationary risks include a much faster cool down in lending and demand than we're currently observing. An important factor affecting our decision-making is fiscal policy. If the budget impact is less disinflationary than assumed in the announced plans, we will need to adjust the key rate path. Furthermore, there are still risks associated with geopolitical developments which are predictably unpredictable. To wind up, a few words about our future decisions. I would like to remind you that the key rate of 21% was set in late October. It will take no less than 3 quarters for its effect to fully translate into the economy and inflation, which means that adjusted for inertia and time lags, our previous decisions will continue to ensure disinflation. In the environment where the balance of risks remains shifted towards pro-inflationary ones, our approach to cutting the key rate requires a lot of caution. This suggests that there might be pauses between steps. Moreover, if inflation stops decreasing sustainably or even starts accelerating, the key rate may be raised. we need to maintain tight monetary conditions to ensure further disinflation. This is possible even when we cut the key rate, provided that inflation conditions are also declining. Our future decisions will be aimed at achieving the inflation target close to 4% in 2026. Thanks for your attention. Now, dear colleagues, the questions. Don't forget to introduce yourselves. Masha, over there, please. Good afternoon. TASS Information Agency, Maria Stepanova. I've got the traditional questions. What kind of options were on the table considering the key rate changes today, and what kind of possible signals you discussed to send to the market? Today, we have reviewed two options. There were suggestions to keep the rate as it was, as well as to reduce it. But at the same time, one should know that many of those who propose to keep the rate allowed, ideally, to have it lowered down during the next July meeting. The whole debate was around whether it should be reduced by 1 percentage point or half a percentage point. Eventually, the board of directors made a decision that sufficient number of facts have accumulated for the key rate to be lowered to 20%. Any more beyond that, in terms of substantial steps, was not considered. Also, the board of directors in the course of today's meeting is acting on the premise that the rate will be moving towards the levels towards the end of 2025, which we announced in our April forecast. And so, with this in mind, today's decision should be viewed as the one staying within the range of the forecast rate changes given during the last Board of Directors meeting. Nastya, in the second row, please. You already mentioned that Anastasia Savelyev from Interfax Agency already mentioned that you're going to entertain a very cautious approach. Can one say that the July cut is not predetermined? And isn't there any errors in your communication? Because in April you produced a positive signal, but today you reduced the key rate. Well, first of all, the neutral signal presupposes both the key rate going up as well as going down. That's why it's neutral. So there is no discrepancy. As far as the future changes in the key rate, it's not predetermined. Our decisions are going to depend upon the way the situation is going to evolve based on the data that we will have in our hands by the next board meeting. Colleagues, Jana, please. Jana Churachkina, RIA Novosti. Elvira Zadovna. I wanted to ask you whether whether today's statement didn't contain any inflation forecast for 2025. May 1 consider that this forecast is going to be changed for a higher level, for a high one. Well, inflation is shaping up closer to the lower bound of our forecast. We would rather say that we would be more certain when we update our forecast in July. But considering the data for the first few months of this year, this is going to be more towards lowering the forecast. How material it's going to be, I would refrain to say, because before the next July meeting, there will be a lot of data coming in. So consequently, we're going to be making a decision to further review our forecast based on that data. Thank you. The next question comes online from Fyodor Turov, C.FM Media Group from Novosibirsk. On the left wing of the Russian parliament, the basic claim against the central bank is that the central bank's policy deters the development of the manufacturing sector that everyone is speaking about, including the president. According to what they say, the regulator is failing neither to decelerate inflation nor give money to the economy. So what's the purpose currently? Is it the priority purpose to decelerate inflation or to allow the manufacturing sector to develop further? Maybe you could kill two birds with one stone. Well, whatever truly deters the development of the manufacturing sector, and I'm very much convinced in that, is high inflation, because the growth of the general level of prices in the economy inevitably leads to businesses seeing growing costs for inputs, for equipment, for payroll. And against high inflation, there aren't any affordable rates, even if you consider the key rate. The real market rates are going to be high. So there is never a stable exchange rate of a national currency. So it is difficult for businesses to plan something ahead. Indeed, this is very important for businesses to enjoy. So effectively, inflation eats up the economic potential, and that is why our goal is to decelerate inflation and to allow the manufacturing sector to develop. So these targets, these purposes don't contradict each other. Moreover, they complement each other. Thank you very much. Dear colleagues, now, Ivan Schligin. Schligin Pro project. I've got the following question. Principally speaking, is it possible to reduce the key rate ahead of inflation and the inflation expectations? Or principally speaking, this is out of the question. One first has to make sure that these indicators have gone down and then take a look at the key rate. Yes, indeed. In order to reduce the rate, we must make sure that the deceleration of inflation from high points is sustainable. And that is exactly why the board of directors has currently stated that we've got greater confidence in the sustainable lowering of inflation. And by the way, we were saying that it's not necessary to wait until the 4% inflation in order to start reducing the key rate. In this sense, we are relying upon our look into the future, upon the forecast about the inflation picture is going to evolve in the general economic picture over the next period, and we make our decision not only based upon the current environment, but also assessing what this future holds in store for us. But in order to make up our mind, we need to make sure that the inflation is going down sustainably, and it is reducing down to 4%, which is our target. Colleagues, please. Rita. Margarita Mordovina, RBK. On the eve of the June board meeting, many analysts, as well as in the government, announced their expectations as well as their forecast about the key rate being lowered. Did the central bank take into account, when making its decision, these growing expectations both among the market experts as well as in the government? We are taking into account the views of the experts and analysts. You know, we even hold special macroeconomic surveys, which we publish before the week of silence. We request expert opinions from the government people. But under the law, we are making an independent decision based upon our own analysis of the current environment, based upon our forecast, based upon our own risk assessment. That's exactly what happened this time as well. Nikita, please. Good afternoon. Nikita Mitrofanov, Economical Telegram Channel. Today, my question came from the people in the street, from my subscribers. Once a year, they're asking me the same question again and again, why the central bank policy is so key rate centric. I mean, they expect me to answer that. The central bank has a magic wand in terms of fighting the inflation, but I would like to really rephrase this question in a different way and ask you why the monetary policy of the central bank is so key rate centric, and the quantitative tightening is not being used at all, as well as raising the adequate level, capital level for the bank. Thank you very much for the question. It is indeed a very important one, because effectively this is the question about what is more productive as an instrument to impact inflation, as well as impacting the monetary condition of the country, influencing the monetary aggregates, and via that upon the aggregate demand. We've got several considerations. Let me mention the first one. The key rate not only bites up the key rate, but as well as the expectations towards its future trajectory, which we're trying to affect through our communication, does not define the structure of rates in the economy. And specifically, the rates define the readiness of the households and businesses to consume, to save, to invest. And through this key rate, we impact both channels, the lending and the savings. This is a very important principal difference in the rate, for example, compared to the regulatory measures, when you can influence the lending activity by either tightening or easing the requirement placed upon the banks in terms of their capital, which practically doesn't affect at all the savings behavior of the households. Second point, whenever we are changing the key rate, we essentially, as the central bank, we affect only one thing, the cost of short money in the economy. And then, well, I mean, certainly our communications do influence the expectations towards the key rate over the long-term period, but all the rest of the indicators, including lending activity, for different terms, for different category of borrowers, all of that shapes up under the market forces, and henceforth our monetary policy doesn't substitute the financial market. It allows the market to create all the rest of the terms and conditions for lending activity. And that is really very, very important in order for the transformation of household savings into investments to be more effective, because this is being defined by the market. But indeed, at times, one hears people saying that administratively, through regulation, what is regulation? Still, this is an administrative measure. One can limit the amount of lending in order to raise the key rate. You can restrict the money mass in this way and effectively accomplish the same kind of an outcome that we want with the key rate remaining unchanged. I mean, the key rate will remain the same while the lending activity won't grow. But this is an absolute illusion. If administratively, one should install quantitative limitations, and the demand for lending at the low market key rate will be big. Still, the interest rates will grow. Take a look at other countries. I mean, there are some of them. Analyze it, because there are jurisdictions where the inflation is somewhere at our own level, but the key rate is much lower. But the interest rates for the marketplace are the same as in here. And therefore, I mean, at the same time, you may lose the anchor controlling the interest rates in the market. Another consideration, you cannot change the regulatory norms frequently. Once a month, not a single bank will be able to organize its business model expecting that the regulation will be changing every other day, because it will stop lending. But you also, mentioned these two methods, like the quantitative tightness for the compulsory reserve standard. It is always applied after the quantitative easing, but the quantitative easing used to be applied in the countries with low inflation and where it was possible to use the key rate, was limited. And so they were trying to avoid falling into the negative area. Now, the norm requiring the compulsory instrument and tools indeed was something that some of the countries used back in 1970s and 80s as part of the monetary targeting approach, which is something that doesn't have the kind of negatives, like I said, when you're administratively regulating the amount of lending, including through the banking regulation tool. It could be effective when a central bank ceases to stabilize short-term rates. Then your short-term rates are going to be very volatile, and essentially that is going to be against the effectiveness of the financial market operation. And most of the central banks which actively applied this tool several years ago eventually gave up, and because I believe that the targeting inflation by controlling the short-term rate is the most effective approach. Alexei Borisovich, please. Yes, they gave up on that several decades ago. Yeah, you see, several decades ago. Thank you very much. Now, the next question comes online from Alexei Bogomolov. The city of Cherepovets, as of July 1st, the utility bills are going to grow by 1.1%, which is higher than last year because in those years it was 9.8%. Because of that, the utility services rates are growing faster than in 2024. Business costs will also grow, meaning that inflation will follow suit. Won't it be the reason for a further tightening of the monetary policy? Well, indeed, the utility services tariffs have been growing faster than inflation, and we're concerned by it because it sets the inertia in the higher inflationary expectations. But in as far as the tariff indexation dynamics is concerned, the tariff growth had been announced a long time ago. We've already taken it into account in our decisions and in our forecasting exercise. We indeed expect that in July, when tariffs are going to be raised, there could be a one-off acceleration of prices for utility services as well as the general inflation. But after that, the monthly price growth will start slowing down. Usually such one-off fluctuations by themselves do not require interfering into the monetary policy terms. Like I said, people are taking a look at the prices spiking in utility services and translate that over a broader set of goods and services and future decisions, so inflationary expectations consequently demonstrate growth. And basically, exactly these new higher indexation of utility services, as well as the expectation for the tariffs to jump, could be one of the reasons as to why households' inflation expectation, despite the inflation slowing down, are not showing the same kind of fact. Like I said, that the households' inflation expectations are volatile, but do remain at higher levels. Thank you very much. Next one, Konstantin, in the second row. Good afternoon, Konstantin Shurik of Russia 24. Some experts propose to introduce grace periods in terms of the lending rates for some of the industries, with regard also to some individual big project requiring investment, but the interest rates as to such purpose-specific lending could be lower than the general level of the key rate. What do you think about it? Well, thank you very much. You know, the government for many years has been pursuing its economic policy, amongst other things, through the mechanism of subsidized interest rates. I mean, supporting the sectors and the investment projects which they believe to be priority via the subsidies in terms of the rates. Effectively, as far as the end borrowers are concerned, they are subsidized ones. They are below the market rates, and so the amount of such programs has grown. In 2024, the banks have issued a little bit over 6 trillion rubles of loans at the subsidized rates, including the mortgage market. But if, for example, you compare it to 2020, when we were fighting against COVID and there was a big support through the subsidized lending, this amount was 3.8 trillion rubles, you see. So there's a lot of lending like that available. But one has to be very prudent because such subsidized lending should be offered to priority projects. Why? Because the consequence of an application, of a massive application of subsidized loans, in order to fight inflation, in order for inflation not to accelerate, the central bank has to maintain a high key rate for the rest of everyone. So effectively, this subsidization is being paid for by those who get lending and borrows at higher market rates. And so that brings me to a general conclusion, because it means that the stable, low inflation is exactly the thing that makes lending affordable for broad industries and enterprises, because low inflation makes lending available at moderate rates. Thank you, colleagues. Irina, in the last row, please. Good afternoon, Elvira Nabiullina. Money Doesn't Sleep channel. Could you please comment on what do you think about the current ruble exchange rate? What is about the inflow of liquidity, and what about the demand for rubles from the dividend payers? Or is it the consequence of the fiscal rule when you maintain and see that the currency is being sold and there is a demand for ruble as well? To what extent the ruble has appreciated? How stable is this trend? Should we expect any volatility towards the end of this year? Thank you. At this point, we've got greater confidence in the stability of the exchange rate compared to April. The biggest share of the ruble's appreciation we explain by the consequences of the tight monetary policy. This is a fundamental factor. I mean, short-term factors like the dividend payment season, it doesn't. It may affect the ruble exchange rate, but it doesn't set the course. Now, the exchange rate could be considered as an independent factor, separate from the tight monetary policy, as long as it is the consequence of the external conditions changing, like the export fluctuations. But the appreciation of ruble this year, first and foremost, is a manifestation of high ruble rates and the tight monetary policy. In February, March, and April, we were less sure of that. But considering the last 2 months' exchange rate, our level of confidence has grown. Now, to put it in different words, strengthening of the ruble in the part brought around by the changes in the monetary policies, one of the manifestations of the way that it comes from the channels, in terms of the way we impact inflation, rather than something separate and happening of its own volition. Thank you very much. Natasha, please. Natalia Trushina, Economic Department of the Moscow Komsomolets newspaper. I've got the following question also about the ruble exchange rate. By June, the exchange rate went down to 79. I mean, the dollar exchange rate went down to 79 rubles. The ruble has been strengthening itself since the beginning of the year. At the same time, a number of experts do say that because of the budget deficit, the financial authorities may make a decision to somehow adjust it towards depreciation, because the fiscal system has to be filled. Could you please tell us what your attitude towards such thinking, whether the Bank of Russia, together with the Minister of Finance, has been discussing the ruble exchange rate, and if positive, within which categories, within which verbs or words are you discussing how to bring it down? Well, thank you. Well, the first and the most important thing, the Bank of Russia and the Minister of Finance do not discuss any target setting in exchange rate, because the exchange rate in Russia is a floating one, and only the floating rate allows us to pursue an independent monetary policy. How I often are saying, it works as an inbuilt stabilizer for the economy. And that is why the ruble exchange rate, we think, can and should be considered only as one of the indicators amongst others in our macroeconomic forecast, rather than any target variable. Now, the evolution of the exchange rate is being brought around not by the need in the fiscal system, but by the demand and supply of the foreign exchange in the market, which may be affected by external conditions, by prices, by the amount of demand for our export staples, geopolitics, as well as the macroeconomic policy. And I believe that is exactly what we're currently seeing, although this is not a linear kind of impact. Again, in order to ensure some specific exchange rate, tight monetary policy that we are pursuing in order to decelerate inflation also affects the ruble exchange rate. And we're going to pursue the kind of policy that is required specifically in order to bring inflation to the 4% target, and consequently the exchange rate trajectory is going to be the kind that conforms to this forecast. Thank you. Now, the next question comes online from the city of Yaroslavl, from Alina Korashova. Investments by Alina Korashova, Telegram channel. Well, the first part of my question is also related to the strengthening of the ruble exchange, because in the investment community there is an opinion that the current appreciation is also related to the inflow of foreign capital into the Russian market because of the high yield characteristic. Is that so? Or is this demand is being supported only by the internal marketplace? And the second part of my question, during the recent discussion of the key rate, it was noted that the risk of the trade wars escalating are becoming more prominent. What the central bank is going to undertake in case it may produce, these risks may produce additional impact upon the inflation. And, well, I shall repeat it again. Our assessment is that the strengthening of the ruble is largely related to a tight monetary policy, because, you see, foreign investments are remaining difficult because of the sanctions and the reciprocal restrictions, although currently there is a record rate differential, between the ruble-denominated rates as well as the rates in other currencies, which truly shows that we are dealing not as much with the foreign investments and the foreign companies, but as much as well for the Russian companies, the Russian households. It became more profitable to save in rubles rather than accumulate assets and savings in foreign currency. And alongside the fiscal rule, that is promoting stabilization in the foreign currency supply. At the same time, we've witnessed great activity on the part of the friendly residents in the Russian market. It was not significant, and their share in the overall market volume was not material. So we don't see any strong influence upon the exchange rate. Now, if the trade wars become stronger, we will make the kind of decisions with regard to the rate so that there won't be any new inflation spiral. Mr. Zabotkin, just one remark, if I may. The foreign trade restrictions, which impose limitations upon our exports in a stable form, effectively, they do deduct from what we describe as the potential GDP from the kind of level of demand that the economy may afford without the inflation accelerating. And consequently, yes, we will need to take it into account in terms of the key rate trajectory in order to ensure that the inflation stays to the target. Thank you. Varvara, please. Varvara Mikhalchova, Market Power Agency. Does the Bank of Russia have some sort of assessment as to what kind of wage growth amongst the people will be playing up to reaching the 4% inflation or playing against it? Well, we cannot talk about the quantitative assessment. The wage growth, the kind which conforms to the growth in the labor productivity, is not going to promote the inflation growth. Because if the wages grow faster than the labor productivity, this wage growth inevitably is going to be eaten up by inflation in the future, because inevitably it will happen. Maybe not immediately, but it will. Okay, colleagues, please. Evgeny? Thank you, Evgeny Rachov, Izvestia newspaper. My question is this. Could you please tell us why inflation expectations amongst the households remain at a high level, and what may change the situation, both in terms of and what is the way that the Russians' expectations are being affected by the price growth for the food products and non-food products? But indeed, like I previously stated, and I shall confirm it again, we are concerned by the fact that the households' inflation expectations remain at higher levels, practically without going down, despite the inflation easing downward. We, first of all, explain it by the fact that the people's inflation expectations, first and foremost, come from seeing the actual price is changing for what they're buying every day, because people are not buying smartphones and TV sets every day, like I mentioned, because either the price growth rate there is slow or it's slowing down, because people buy food every day. And if the prices are growing for food staples at a higher rate, then of course that is something that pushes them towards inflation expectations, because they are currently growing faster than inflation, which is also the consequence of the high inflation. This is not an accidental something, because the lower is the inflation, and we witnessed it through our own experience, the narrower is the differences between different food and product category prices. Okay? Therefore, against the general inflation going down, these differences are going to narrow more, and the everyday staples prices are going to grow lower, for the product that people consume every day. Thank you. Colleagues, please. Vladislav. Thank you, Vlad Lobov. Invest Future. You have already stated that the key rate demonstrates its effect with the 3 quarters lag. Minister Reshetnikov, the Minister for Economic Development, sees already an overcooling. Some of the economists do note there is a recession in the industries which are not related to the defense industry. You mentioned that, based on your assessment, the economy demonstrates a balanced growth, but nevertheless, are we close to stagflation or a recession? And if so, how close are we? Well, I mean, we are close to the scenario of the balanced economic growth rate. Now, speaking about the overcooling risk, it has to manifest itself somehow because economic overheating demonstrates itself via a high inflation in labor shortages when the available labor resources are fully utilized. If you take a look at these indicators, there is no overcooling because our inflation is still above target. The unemployment is lower. The averages over the past several years, and so our task is exactly to do it in such a way so that the slowing down of the growth rates to be even, smooth, so that we end up in a situation where we have a stable low inflation and stable economic growth. Colleagues, please. Sergei in the last row. Sergei Bolotov, the Russian Gazette. Could you please tell us why, in the balance of risk, you never discuss the issues of migration policy? I mean, understandably, the central bank doesn't regulate inflation, but the labor resources do generate a big impact upon the economy and the kind of factors that the Bank of Russia takes into account in its monetary policies. Could you please tell us, do you have any position towards this issue? Well, I mean, we definitely watch over the labour market because this is a very important factor. We always talk about the labour market risks. However, we take a look at it comprehensively. We do not separate out the migration policy, but the factor of the migration policy is something that we are mindful of. And we understand that we need to enjoy a certain labour market flexibility in terms of being able to retain or recruit certain labour force. Mr. Zabotkin, please. Yes, and the higher is the flexibility in the labour market, the more elastic is the labour supply, which also presupposes a much more freedom in the labour migration, not only from without but also from within. Then lower is the fluctuation inflation related to the aggregate demand labour. Next question comes online from Syktyvkar town from Pavel Korolov. Durgal TV channel, please, Pavel. Good afternoon, Elvira Nabiullina. After the last central bank decision on the key rate, the bank started lowering the deposit rates for many people in the northern territories, including the Komi Republic. The bank deposits are one of the often used ways to save one's earnings in the high inflation. Do you believe that further reduction of the deposit rates may push the households into more riskier forms of saving, like buying currency or trying to become investors? Or does the central bank plan anything else to do in order to protect people's deposits? Thank you very much for your question. It reminds us that the high rate is not only about lending, but also about deposits, and the high rate protects savings, and the inflation slowdown is the biggest measure which supports the real earnings at the deposit level. So the real, the adjustment towards the real inflation change is there. You see that it's possible to open up a deposit at 18% per annum in the interest, while the current year inflation is going to be twice as low and will continue to further go down. We shall be lowering the key rate only along with the further slowdown in inflation. So the ruble-denominated lending will remain will retain its high interest rates. We don't expect any overflow from the deposits into the stock market or into the currency exchange market. For example, the yields from the foreign currency deposits are lower than from the ruble deposits. The ruble deposits within the insurance coverage, basically a risk-free product. Any overflow into the stock market from different instruments is normal. The most importantly is for when people are trying to put their money into the stock market, they should understand that the risks are much higher, and they must understand what's best for them in terms of the instruments. For example, for the most conservative kinds of investors who would like to invest into the stock market, there is a program of the long-term savings. This is effectively very much close to the savings program than simply just investing into a risk asset. Marina, please. During the Alpha Summit a couple of weeks ago, hello. Yes, during the Alpha Bank Summit a couple of weeks ago, you said that you love opera and the classic music. So what do you think is the music that best resonates with the situation of inflation in Russia today? Is it anything patriotic or Tosca or anything else? Are we in minor mode or in major mode right now? Beethoven's Ninth Symphony, I should say. Oleg, colleague, please. I see you have raised hand, but I don't see you. Yeah, good afternoon. Alex Biskup from Kommersant newspaper. Elvira Nabiullina. A bit of a overcooked question. When you were considering today's decision, you definitely thought that the market will split into two pieces. One will say that for the purpose of economic regulation, it would have been okay to change it by 0.5%, while the other will be insisting that, no, everything is normal and let it stay as it was. Well, roughly speaking, my question is as follows. How much in this decision that you made, how much politics or economics? I mean, people might say that the central bank was under some pressure. If it were to be a purely economic decision, it would have been 0.5%. But some will definitely insist that for the political decision, 0.5 percentage point would have been enough. But the full percentage points, that also is based on the economic considerations. Maybe this is also a question to Mr. Zabotkin. So what would your response will be to both of these parts? I mean, my answer is going to be very banal. We are making our decision based upon our own analysis, upon our own risk assessment practices. You know, whenever people are saying under pressure, well, what they mean by it, I guess some are saying that one should be lowering the rate faster, while others, for example, you've heard this previous question about people worrying about the deposit rates as such. I guess that being under pressure, you mean the kind of opinions expressed from experts about what kind of rate there should be. We don't consider this to be a pressure. And by the way, within these opinions, much lower key rates are being discussed compared to our today's decision, because if the central bank would give in to such pressures, the key rate would have been much lower and the inflation wouldn't slow down, it would accelerate. But it doesn't happen, as you can see. Mrs. Zabotkin, well, I can only add, it's very surprising for me to hear this kind of question, because it really never emerges in terms of be it an emotion or any sober consideration during the Board of Directors meeting. Yes, good afternoon. Could you please tell us, if the basic disinflation comes from non-food products, then what kind of tools the central bank would be ready to apply if the depreciation of ruble will bring disinflation into this segment as well? What is the probability of the key rate growing, or the current level of it is going to be good enough in order to keep the prices where they are right now? Well, on more than one occasion I mentioned, and I shall repeat it again, we believe that the exchange rate dynamics in many ways is the consequence of our tight monetary policy. And so to consider this as a absolutely standalone factor that the exchange rate is going to depreciate despite the tight monetary policy and will need to raise the key rate, no. Certainly the exchange rate is being affected by other factors, external one, the geopolitical one, and so on and so forth, and we are monitoring it. But what we act upon is that the current tightness, both in the monetary conditions, is enough in order for inflation to slow down in a sustainable way down to 4%, I mean, in annualized terms, towards the end of last year. And colleagues, please. Ekaterina, in the last row. Yes, hello, Ekaterina Litova from Vedomosti. Recently, in the financial stability risks review by the bank, you noted that the major corporates demonstrate the worsening of their financial status. Could you please explain what industries, or possibly which companies from which industries you had in mind, and did it play any principal significance in your today's rate decision? If speaking about exporters, what is their current financial situation against the backdrop of ruble appreciating? Well, with regard to the analysis of different industries and different businesses, definitely we are monitoring it, because I already told you about the surveys that we organize, and we take a look at the financial reporting data, and we conduct such analysis, and the kind of information that we gather is the one that you can see in the financial stability review. However, the risks to the financial stability, the risks of any serious decline in the systemic stability of major businesses and sectors, we don't see this, because overall the situation about the financial status of the company remains stable. And actually, not so long ago, the profit data was disclosed. It is more moderate, but in the majority of industries, it was high considering the historical information. So it's a very diverse situation, something that I've already referred to, and that is happening under the guise of structural changes, because structural changes are simultaneously taking place in the Russian economy, and so the demand for some products that are being produced by the domestic manufacturers is growing faster, in other cases slower, and it can go down after an overheating in individual sectors. That is the impact that comes from external demand, something that we've heard mentioned several times. So we do observe a difficult situation in coal industry, although there are also different businesses in the coal industry as well, because it is indeed very diverse. But you have to make a general assessment, and so despite a more moderate profit growth and the fact that some individual companies face difficulties, maybe because of external limitations or because of a big debt burden, general situation is stable, and major businesses do demonstrate stability. Maybe we see more problems in small businesses and micro businesses. Thank you very much, dear colleagues. Other questions? Jacob, in the first row, please. Good afternoon, Jacob Chimako from Expert magazine. Well, I suggest that we step away from the topic of the key rate. During a press conference, you were saying that one shouldn't ban grace periods or that one should try and protect the Russians from anybody forcing such offerings to them. In your stability review, since the consumption portfolio grew by 47%, 27%, reaching 34% from the aggregate portfolio in unsecured lending and borrowing. And so the central bank links this particular trend to the popularity growing amongst the installment payments. In marketplaces, demonstrate a more loyal approach to the consumers. Some of the installment payment system can be considered as bona fide lending. Doesn't the central bank see any risks in the Russians attaining a greater credit burden and in the law on installment payment? Would you believe that the limitation of 5 million rubles is good enough? Well, you're quite right in saying that the installments that are being allowed through the microfinance institutions from marketplaces are the very same credits and loans. But I must tell you that all the regulations are applied to them, like analyzing the credit worthiness of a borrower, that those who are overburdened with credits are having a harder time as the scoring is being applied. The loans are not issued just blindly because the borrowers have to demonstrate a number of guarantees that it can present to an issuer. So microfinance institutions and the banks, we don't have any concerns because whenever that is taking place, there is a credit history bureau, and microfinance institutions also disclose information on any size credit, even worth 1,000 rubles. Now, the limit of 50,000 rubles that you asked about, it is intended for the kind of installment payment which is being made available not through the bank or a microfinance institution, but through the so-called installment operators, and that is subject to no regulation. So if the 50,000 overdue, they must share the information with the Credit History Bureau, but under that amount, nothing is going to change. Why 50,000? There was a big debate about it, and this is a compromise. Effectively, this is the kind of money which is equivalent to the size of credit without the grace period. I mean, because people have a certain entitlement to a grace period above the 50,000 when borrowed. Now, this particular law on installment payments is being prepared for the second reading. Hopefully, the Russian parliament will pass it before the end of the spring session. And it is also important for the legal certainty to come, because so 50,000 was a bit of a compromise. Thank you very much. The next question comes online from Anna Gromova. Anna Finance, please. Good afternoon. Anna Gromova, Anna Finance. Elvira Nabiullina, today you have already mentioned that price growth in between different food products. Yes, in April, inflation slowed down 6%, but according to the Center for the Macroeconomic Analysis and Forecast, in April, the inflation for the poor Russians exceeded 20% level. And so whenever you are saying that the tight monetary policy demonstrates this three-quarter-long lag on average, is there a possibility to somehow, make a guess, sorry for saying that, how quickly the inflation is going to go down in the food categories, in transportation, which is the kind of cost category which represents the biggest one among the financially most vulnerable category of people? Well, indeed, people with low incomes suffer most from high inflation. First of all, because people with low incomes, their share of expenditures and what they spend on food is higher, and the food lately has been demonstrating stronger price growth compared to the consumer prices generally. So people with low incomes also suffer from high inflation, also because they cannot compensate inflation with a saving, because against high inflation, the spread of different prices over different products and staples can be very, very pronounced. As inflation lowers down, and that is already taking place, the food prices are also going to change not as quickly. So the only way, the only instrument that the central bank has at its disposal in order to protect the most vulnerable people is to slow down the overall price growth in the country. And here I should mention, speaking about the third quarter, This doesn't mean that when we made our decision about the key rate, that this decision starts translating into the economy 3 quarters later. No. The effect is immediate, but the full effect may take more than 3 quarters sometimes. And so we already see that under the influence of the key rate, the general inflation started demonstrating. It's slowed down. Mr. Zabotkin, when we talk about the prices for food, that is one of the most volatile part of the basket. Why? Because the food prices very strongly year in, year out are being affected by the yield of different crops, not only in Russia but also in other countries, because the food market is a global one. Last year, as you may recall, the crop yield was very moderate within a whole series of farming staples. Now, this year, the picture is looking much better, and so it is important to understand here you don't need to have a record crop yield as long as it is not worse than it used to be last year, because that will generate a certain deterrence and certain stability in the food price market. Thank you very much, colleagues. Any more questions? Grigory, in the last row, please. Hello, Grigory Bazhenov, Popular Economic Science blog. My question is about the recent survey that was published by the Department of Surveying and Forecasting in the Bank of Russia. As part of that survey, the Bank of Russia was trying to understand what kind of information could materially impact the inflation expectations, and it has demonstrated that the only information that materially may impact the inflation expectations is the nominal money mass growth rate. So my question is very simple. Considering this, does it mean that the Bank of Russia possibly, if these results turn out to be stable, should change its accents in terms of the way it communicates with the economy? And my second question is a bit speculative, although a simple one, and it is as follows. By way of guidelines, and to anchor the inflation expectation at the low level, it is recommended to maintain the tight monetary policy for a longer period of time, and respectively that would later on allow one to arrive at a stable inflation which would lower the level of inflation expectations. So can one imagine a situation when the actual inflation has come to the target, but at the same time the inflation expectations remain elevated? So what will happen then in terms of the key rate trajectory? How the central bank will act under such conditions? Well, thank you very much for your question. The inflation expectations, indeed, the most important indicator to us, but inflation expectations, to us, what is important is not only the household's expectation, but also the businesses' expectations, which are going down, notably have gone down. And it is impossible to identify only one particular criteria for the key rate change, because it always involves a whole set of factors. Now, as far as our communications and our analysis are concerned, in terms of what is the factor which might impact inflation expectations, this is not only information about the money aggregates in the first place. This is the actual price dynamics on the store shelves. Yes, inflation expectations to a certain extent may be impacted by our communications, but the core thing which affects people's expectations towards inflation is what is happening to the prices they see every day in shops. But as far as the communication is concerned, possibly, indeed, we ought to pay more attention to money aggregates, because you're right, there's never a low inflation against a very high growth in money aggregates. We've all had a chance to see that. But the reverse thing is important. But the slowdown in money mass growth, which has been taking place since the end of last year, is being preceded by the slowdown in inflation. We are paying attention in our monthly reports about monetary conditions that I guess mostly read by analysts and experts since 2023. We've been publishing also our day-to-day statistics about the money aggregates. One cannot say that this is totally out of our radar, no. But I believe you're right. We should pay more attention to it. And thank you very much much for such a reminder. And as far as the speculative part of your question is concerned, I suggest that Mr. Zabotkin should respond to that. Thank you very much. I find it hard to understand. Why speculative? I think it is very much a practical tool and thing, and you can respond to it in the following way. If the inflation expectations remain elevated, then the inflation slowdown cannot be considered as stable. And that is why, with high inflation expectations, the monetary policy is going to be tight or moderately tight, depending upon how elevated those are. But in the end of the day, switching to the neutral monetary policy, like the one that has been identified by the forecast range in the rate for the next year, can be feasible only with the stabilization of inflation close to 4%, and also so that the inflation expectations could be in concert with the low inflation. It doesn't mean that the inflation expectation that is being measured as part of our survey among the household are going to be 4%. No, because back in 2017, 18, and 19, because it was at 8%. So going back into that territory is something that one could consider to be okay, so that the inflation expectations went back toward as being in line with inflation. When we talk about inflation expectation, clearly we're not talking only about people, but also about businesses and the companies, like the governor said, the overall the inflation expectations in terms of the households, they're more affected by what the prices they see on the shelves. But nevertheless, that was even higher. Price expectations were higher, even when the inflation was close to the target. Thank you very much. Tatiana, over there, please. Good afternoon, Tatiana Voronova, Frank Media. Elvira Nabiullina, over the past few years, even if we saw players leaving the banking market, as a rule it was a voluntary action. So we've gone through a very quiet decade. So my question, to what extent the cleaning mechanisms that, with your involvement, was established in 2017 is adequate to the current economic environment? If all of a sudden risks emerge, then the administration tool apply to the currently insolvent players, what kind of priority they are going to pursue? Well, first of all, we assess the current status of the banking sector as a stable one. We do not see the risks that you are referring to. To my mind, the administration mechanism that we proposed instead of the credit-based one, when, for example, a bank is capitalized immediately, has proven to be much more effective than the preceding instrument. But I believe that you are right. One should take a look every now and then at what should require a bit more fine-tuning if there's a need for it. So currently we see that we're going to actively apply it because the state of the financial sector is very stable. So, in a very premeditated way, we're coming out of the regulatory easing. The banks have gone out of them, the majority of them, and they're able to manage. They have sufficient capital reserves, so there are no particular concerns that we have here. Thank you. Next question comes online from Denis Yelachovsky. Yelachovsky YouTube channel. Please, Denis. Good afternoon. I realized during the second part of this press conference that all of my questions were raised by it, so I would like to be of a little of assistance, not to myself, but to the analytical community. What kind of indicators you may recommend the market to watch? Because the Bank of Russia added the trend inflation with a whole set of other indicators. The inflation sensitive to the exchange rate, non-sensitive, cyclical, non-cyclical, demand-based, non-demand, because very often these indicators really do not dovetail. So also, to Mr. Zabotkin, what are the figures that you are watching in the first place out of the disclosed or non-disclosed reports? Well, the target inflation is based on the consumer price index. This is the most important one, but indeed we also apply a whole host of indicators that describe the price dynamics with volatile and non-volatile components based on foods and services, structure-based. It is simply important to really understand what kind of processes are taking place, and so we have been applying them for quite some time already. Maybe, indeed, the kind of indicators that we're paying more attention currently. It is the so-called, we describe it as the current inflationary pressure And this is seasonally cleaned indicator, because within 1 month there could be some spikes. So this is the 3 months long price growth indicator in the consumer price index, annualized. Mr. Zabotkin, correct me or add something to what I've just said. Well, I'll do my best to complicate the answer as much as I can. One has to take a look at all of the indicators that we publish, because that's exactly the purpose that we include them into it. Some people have complained that there are too many of them. All these indicators are listed in the materials that the board of directors is analyzing. I guess from the point of view of understanding what kind of the board of directors, what will be the decision that will go for, the best way is to put all these indicators together and just to understand in which direction the cloud of these indications is moving. And basically that's where the debate in the analytical community emanates from. Thank you very much, dear colleagues. Evgeny, please. In the last row, please. Good afternoon, Evgeny Ryabkov, Bitcoin Project. My question is this. You mentioned that inflation this year is staying close to the lower bound of your forecast, but as far as the economic rate growth is concerned and lending activity, are they also staying to the low boundary? What would you say? Well, as far as the economic growth rate is concerned, I guess close to the lower range. But as far as the lending activity growth is concerned, also as part of our forecast, it is closer to the lower boundary. Mr. Zabotkin, please. Well, being reminded by Grigori that we need to talk about the money mass more often. Yeah, the money mass is in the middle of the forecast range for this year. Because the aggregate demand is not only about the lending activity growth, because the fiscal operations also do impact, and so we take a closer look, and that's what we ask you to do, also take a closer look at the money aggregate. Are there any more questions? Yes, Natalia. Good afternoon, Natalia Kotovskaya, Pro-Finance. My question is about some cases in mortgage lending. These cases is something that our subscribers shared, and that is something that raises concerns. What I mean to say that when banks were issuing mortgage loans for private housing to be built, the borrowers had to select a certified developer from the list that banks gave them. And such contracts didn't have any escrow accounts, so the money was paid directly to the developers. What happened afterwards? Some such developers became insolvent. And clearly, there are now litigation in place, but in the end of the day, the borrowers don't have no money, no houses. But that is not the most important thing. What is currently happening is that the banks, according to a contract between the borrower and the bank, under the terms of such a contract, what happens? If the house was not built within a certain period of time, then the bank can raise a rate in that mortgage loan. So the borrowers are going to the central banks, which recommends the banks not to raise it, but still the banks do it and make a decision at their own discretion. For many families, this is a substantial part of the family budget, because sometimes payments grow double. And so my question is as follows. Is it possible in such cases to oblige the banks not to raise the rate? Because the house was not built, not because of the borrower's fault. Well, thank you. Yes, indeed, it is a problem. Rather, two problems. And you've precisely described the two of them. Let me begin with the second one, with the second problem. It is in no way related to the banks and their relationship with the contractors, because based on the rules of the subsidized mortgage, if a loan was made available to an individual for an individual construction, then the house must be commissioned in the course of the subsequent 12 months. Otherwise, the subsidized rate is no longer effective and is changing to a normal bank rate. So they didn't fit themselves into this timing. Construction would take place more than 12%. Based on our assessment, we did it together with DOM RF. There are about 30,000 borrowers like that. Quite a big number. Yes, we recommend the banks to support such borrowers, if they come and ask for restructuring, and such restructuring exercises with regard to 1,000 borrowers is already taking place, which helps them not to be in default. But certainly, this is not a systemic problem. I mean, there's a solution of such a problem, but the systemic thing is that the Minister of Finance made a decision to extend the period of time for the individual housing within the subsidized mortgage program from 12 months to 24 months. And I believe that the Minister of Finance, speaking in the Russian parliament, made a statement to that effect, which would enable the citizens to go back to a normal mode of repayment. And so the problem is being resolved by extending this period of time in case the people were not able to fit themselves into the originally contracted timing. Now, the second problem is about the borrowers. We assess their numbers currently being at about 5,000, who indeed are struggling with their contractors who are being paid directly for the bank in several tranches, where the construction contractor became insolvent or disappeared, and as a result, people ended up being without any housing, being indebted to the bank. We're also recommending the banks to support such people in order to, defer, delay payments, and make a full write-off or partial write-off. Yes, it is up to the banks in such situations, but usually the banks are quite attentive towards our recommendations. Now, what does it mean in order to improve the situation? It means, and it shows how important the system of escrow account. Remember the kind of outcry there was when we started talking about it, but regrettably, it became obligatory only in March this year. So currently, subsidized mortgage can be made available only through escrow system. And it is indeed very important for people to be protected. And the banks will do a better job in assessing contractors who will be then building, because the risks of not completing the construction will fall upon the bank's shoulders, and people will simply be able to get their money back from the escrow accounts. So that's the kind of systemic solution that we apply here. Well, dear colleagues, unfortunately the time is up. Thank you all very much. Thank you.